California-based First Republic Bank was given a $30 billion lifeline from 11 other banks.
First Republic, which is trading lower in after hours after the market close following the announcement.
Old wisdom says that when you throw a stone in the water, be prepared to deal with the ripples. This statement, which is as old as time, is validated by the ongoing global banking crisis. In financial markets, the ripple effects are called contagion, and contagion fears are real within the banking sector after the collapse of 3 U.S. banks between 8 and 12 March. Hello and welcome to today's video, where we will focus on First Republic Bank and contagion fears. The collapse of Silvergate Bank on 8 March initially seemed like an isolated case. A few weeks later, its ripple effects reverberate across the U.S. and Europe. By March 12, Signature Bank and Silicon Valley Bank suffered the same fate as Silvergate. As the experts conducted the necessary post-mortems, it became clear that this was only the tip of the iceberg. More bank runs are possibly on the way. First Republic Bank, a San Francisco-based commercial bank, could fail or present a good stock buying opportunity. Stay till the end of the video to learn more about the global banking crisis, contagion fears, and where First Republic Bank's share price may be headed. On March 17, First Republic Bank stock was under severe pressure, and by market close, it had lost 32% of its value. For perspective, First Republic's stock price was trading as high as $115 per share on March 8, before falling to less than $13 amid the crisis. This is the kind of market action that spells doom for under-fire banks. But how did the banking community react to this, given that it has a major incentive for nipping the problem in the bud? A group of financial institutions pledged to deposit $30 billion to the troubled bank to restore confidence in the banking sector and calm some nerves. The group consists of banks such as Bank of America, Wells Fargo, JP Morgan Chase, Goldman Sachs, Morgan Stanley, Bank of New York Mellon, and State Street, among others. But to be fair, the damage has already been done. Credit rating agencies Fitch Ratings and S&P Global Ratings downgraded the bank, claiming that wealthy customers would move their money elsewhere because the bank has used the bulk of its customer deposits to lend out money. Customers of First Republic Bank were seen queuing outside a California branch as they scrambled to get their money out. The bank has about $176 billion in deposits, and 68% of them are insured. First Republic's troubles also stem from its similarities to the failed Silicon Valley Bank, known simply as SVB. Both banks have a large size of uninsured deposits and a wealthy clientele base. For example, First Republic offered Facebook founder Mark Zuckerberg a 1.05% mortgage rate on a $5.95 million loan. First Republic Bank faced most of the challenges that contributed to the sinking of other banks. It holds long-term duration real estate loans with a maturity of over 15 years. The bottom line is that First Republic Bank may have weathered the storm, at least for now. With its FRC stock beaten down, one question remains: is it a good buy or pass? Contrarian investors claim to buy stocks when there is blood in the streets. But what happens when there is too much blood, as is the case with First Republic Bank and the broader banking sector? Let's start with the positive side first. The banking sector has stepped in to stop the bank from bleeding. This should help the bank stabilize while looking for the best viable long-term future. The bank is looking for ways to downsize if it requires raising capital or getting a government backstop. The government has shown its willingness to aid banks to instill confidence in the banking sector. Warren Buffett, a billionaire investor known as the Oracle of Omaha, met with President Joe Biden's team to discuss ways to bring the banking crisis to an end by potentially investing in regional banks. Buffett has a history of pulling banks out of dark holes. He rescued Goldman Sachs with a $5 billion infusion during the infamous 2008 financial crisis that claimed Lehman Brothers' head. On another front, U.S. Treasury Secretary Janet Yellen said that the government is ready to provide assistance if the banking situation worsens. She said this while delivering prepared remarks to the American Bankers Association. What does all this mean? This differentiates First Republic Bank from other collapsed banks, and several other third parties are ready to step in and save not just the regional bank, but the entire banking sector. In the short term, this is good for First Republic and its stock. It means that while it is down, it has the potential to go up in the future. This also applies to some of the stocks in the banking sector as the situation improves day by day. There is also the potential of rate cuts, or at least a pause from the Federal Reserve, which has been cited as partly to blame because of its aggressive hikes over the past couple of months. For now, though, the bank stock will likely remain volatile as probabilities shift and traders change the sentiment on the fly. Is First Republic a good buy? Here are a few reasons in support of this thesis. JP Morgan gave the struggling bank access to $70 billion in funds. The Fed is also extending its help to the bank under the Bank Term Funding Program in exchange for high-quality collateral that includes treasuries. The financial boost means that a lot of depositors will have to withdraw their money before the bank collapses. It looks unlikely at the moment. The bank's Q4 2022 results show that the bank may reduce the potential of incurring significant losses as a result of falling bond prices. First Republic Bank is a less risky bank compared to other banks. It does not trade in exotic derivatives and junk bonds, and is not in the business of issuing auto loans or credit cards. Traders and investors may be more assured after Credit Suisse, a 166-year-old Swiss bank, was acquired by rival UBS in a deal worth around $3.2 billion. A major crisis may have been averted. If the bank survives this turmoil, those who bought the shares at these low prices could be grateful for their actions in the future. However, this is a long shot as many investors may shy away from the FRC stock. Why is this so? The liquidity injected into the bank may be seen as a short-term solution to the bank's funding issues. Banks rely on deposits and cash injections to function properly. According to S&P Global, there is a long-term problem. The rating agency went on to say, "We do not view this deposit infusion, which has an initial maturity of 120 days, as a longer-term solution to the bank's funding issues. We think attracting meaningful deposits will be difficult, constraining the bank's business position." This may be true as the bank's brand has been damaged during the crisis. Investors may want to stay away from the bank's stock until the dust has settled. The long-term effects cannot be overstated. The bank's customers may not feel confident enough to deposit funds into the bank. In the short term, the contagion fears are real. This will affect other banking stocks too. First Republic Bank is reported to have tapped JP Morgan Chase to explore a possible sale. This may shake investors' confidence. For example, Alecta, Sweden's largest private pension fund, lost $728 million after selling all its FRC stock holdings. Some FRC whales may also offload their FRC shares to minimize future losses or to get into new stock positions. March 2023 will be remembered for the banking crisis. It could have been worse, but the government and other financial institutions stepped in to avoid a bigger crisis. The crisis claimed several banks. For now, though, it seems that First Republic Bank will keep its doors open, but it won't be business as usual. Contagion fears will likely force customers to withhold their cash deposits. First Republic's image has been tarnished and has lost the trust of the masses. The bank's stock price has nosedived as if the financial markets are in the depths of a bear market. But even this turmoil could be an opportunity to buy the FRC stock at historic lows. The crisis could be an opportunity for investors who believe in buying when there's blood in the streets, or FRC's falling price could be a real warning.